The global economy is a vast, interconnected system that influences nearly every aspect of daily life, from the price of a cup of coffee to the success of multinational corporations. But how exactly does the world economy function? And why do some countries thrive while others struggle? Is everything as transparent as it seems? Or are there unseen forces shaping the direction of global markets? How is the global economy structured? At its core, the global economy is based on the flow of goods, services, capital, and labor across borders. It involves the economic activities of nations and their interactions through trade, investment, and financial markets. Different countries specialize in producing certain goods or services based on factors such as natural resources, labor skills, and technological capabilities, and then trade with others to satisfy global demand. This is often referred to as the theory of comparative advantage, which suggests that countries should specialize in what they produce most efficiently and trade for what they lack. For instance, a country rich in natural resources might export raw materials like oil, while importing advanced machinery from a nation with a highly developed manufacturing sector. This interconnected trade network is facilitated by global institutions like the World Trade Organization, WTO, which sets rules for international trade and helps resolve disputes. But what keeps this system running smoothly? What drives global economic growth? One key driver is consumer demand. As people buy goods and services, businesses grow, create jobs, and invest in future production. This generates a positive feedback loop. More jobs mean more people earning incomes, which increases their ability to spend, stimulating even more economic activity. The rise of globalization, the increasing interconnectedness of economies, has significantly expanded markets, allowing businesses to reach customers worldwide. Another essential factor is investment. Countries and companies invest in infrastructure, technology, and education to increase productivity and stay competitive. International organizations like the International Monetary Fund, IMF, and World Bank often provide financial support to developing nations to help them improve their economic capabilities and integrate into the global economy. However, not everything operates smoothly. What happens when the global economy faces disruptions? What causes economic crises? The world economy is highly sensitive to shocks, such as financial crises, geopolitical tensions, pandemics, or natural disasters. A significant financial crisis, for example, can start in one country and quickly spread across the globe. The 2008 global financial crisis, sparked by the collapse of the U.S. housing market, is a prime example. When major banks faced insolvency, the impact was felt worldwide as credit markets froze, leading to a global recession. Additionally, global supply chains, while efficient, are vulnerable to disruptions. The COVID-19 pandemic exposed how reliant the world is on interconnected supply networks. When factories shut down in one part of the world, it led to shortages of essential goods, affecting industries globally. In the face of such crises, governments and central banks often step in with policies to stabilize their economies. But are these interventions always in the public interest? Are there hidden forces influencing the global economy? Some suggest that the global economy is not entirely governed by free market principles or transparent international agreements. Conspiracy theories speculate that a select group of elites, through their control of financial institutions, corporations, and governments, may be pulling the strings behind the scenes to maintain dominance and influence global economic trends. These theories propose that certain major global events, such as financial crises or shifts in energy markets, are orchestrated to serve hidden agendas rather than natural economic forces. For example, it is often questioned whether some financial crashes are truly spontaneous or if they are deliberately engineered to consolidate power and wealth in the hands of a few. The role of international financial institutions, like central banks, in manipulating interest rates and currency values has also been a topic of scrutiny. Do these institutions operate in the best interest of the global population, or are they serving other purposes? Another area of speculation revolves around resource control. Some theorists argue that wars or economic sanctions are used as tools to gain access to vital resources, like oil or rare minerals, under the guise of promoting democracy or protecting human rights? Are these geopolitical actions truly for the sake of stability, or do they mask more self-serving economic goals? What is the future of the global economy? As technological advancements, climate change, and shifting political landscapes continue to shape the world, the global economy is poised for significant transformations. The rise of artificial intelligence, automation, and renewable energy sources will likely disrupt traditional industries while creating new opportunities for economic growth. But will these changes benefit everyone equally? Or will the gap between rich and poor nations continue to widen? Moreover, the growing focus on sustainability and the green economy raises questions about the future direction of global trade. Will countries cooperate to address climate challenges, or will competition for resources spark new tensions? In conclusion, while the global economy appears to be driven by the principles of supply and demand, consumer behavior, and investment, there are numerous complexities and hidden dynamics at play. Economic crises, political interventions, and the influence of powerful global actors raise important questions about who truly benefits from the global economic system. Whether guided by the invisible hand of the market or by unseen forces working behind the scenes, the world economy remains a constantly evolving and enigmatic force.